Hey family, how are you? Malika Jackson back again, Bennett Realty Solutions. How are you? Back for day 22 of my top 50 real estate terms in 50 days. So today we are talking about private mortgage insurance. And I wanted to talk about this topic because people always ask me, what is PMI? Why do I have to pay PMI? When do I have to pay the PMI? And when can I stop paying private mortgage insurance? What is this PMI that I'm seeing in my mortgage? So what private mortgage insurance is, it's basically a protection for the bank. So if you're a buyer who's putting down less than 20%, because you remember, back in the day, you had to come to the table with a whole lot of money. You had to put 10, 20% down. That was the norm. Now, some of the larger government programs make it so that you don't have to put so much money down, but there is a cost for that because they still need some insurance. So that's what private mortgage insurance is for. If you put less than 20% down on the cost of your home, at the time you purchase it, you're going to have to pay private mortgage insurance. Now, private mortgage insurance is, it could be anywhere from like 3% of the cost of the home per year to 1.5% of the cost of the home per year. And you pay that in addition to your mortgage, and it's basically like a small insurance policy to the bank that says, you know what, even though I only put down 3.5% or maybe 5%, I'm giving you a little extra to make sure you're protected in the event that I default. So that's basically what private mortgage insurance is. So that's why you see it more commonly with FHA and not so much with conventional loans, because with conventional loans, you tend to have higher down payments. Now, this is the thing. When can you stop paying it is everyone's question. Now, once you pay 20% into your loan, it's going to automatically fall off. So once you go, to closing and you get all your paperwork, there's a really long form in your closing package. It's probably the longest form you have. It's called an amortization schedule. You'll see it at the top. It'll say amortization schedule. Sometimes they just call it the AM schedule. It'll have every single payment from the time you go to closing until your last 30-year payment. And you'll see on there when that 20% kicks in. And at the time where the 20% kicks in, you'll see where the private mortgage insurance falls off, and then you'll see your payment will be a little bit lower. So if you follow those payments, now it might take a couple years for you to get there. It might take a good amount of years for you to get there, 5, 7 years, who knows. But the amount of time that it takes you to pay 20% in, that's how long you're going to have to pay the private mortgage insurance. And then if you check your amortization schedule, it'll show you when you get to 20% paid in, your private mortgage insurance will fall off, and you'll see what your new lower mortgage will be, and that's where we want to get to. So that's my term for day 22, PMI, private mortgage insurance. We try to avoid it. Sometimes we can't. If you have to pay it for a limited amount of time, hey, if that means you could have the house of your dreams, it's just a little bit of money a month. So that's PMI. See you next time.